In a remarkable turn of events, the Trump family has made significant inroads into the cryptocurrency sector, recently taking control of a crypto firm that successfully raised hundreds of millions in funding. This development comes at a time when the cryptocurrency market grapples with volatility, regulatory scrutiny, and a shifting landscape of investor sentiment. As reported by Reuters, the family has advanced its crypto ambitions amid a broader trend of increased engagement with digital assets. This move not only highlights the growing acceptance of cryptocurrency as a legitimate investment avenue but also underscores the Trump family's strategy to diversify their financial portfolio. The influx of capital into the firm indicates a robust interest in the crypto market despite the turbulence that has characterized it in recent months. Simultaneously, the Wall Street Journal noted that the Trump family is not just passively investing, they are actively participating in the Bitcoin mining sector as well. This strategic pivot aligns with the surging demand for Bitcoin and other cryptocurrencies, which has seen substantial fluctuations in value. Following Donald Trump's election win in November, Bitcoin's price surged, reaching record highs. However, the market has since experienced a downturn, with Bitcoin recently trading around $82,200, reflecting a decline from its peak. The volatility of the cryptocurrency market has been exacerbated by broader economic uncertainties, particularly those stemming from the current administration's policies. The uncertainty surrounding tariffs and economic strategies has contributed to a cautious atmosphere among investors. As reported by Investopedia, stocks associated with cryptocurrencies, including major exchanges like Coinbase and Robinhood, have also seen declines mirroring Bitcoin's downturn. In response to the evolving landscape, Japan's financial services agency FSA is preparing to introduce new regulations aimed at classifying cryptocurrencies as financial products. This regulatory shift, reported by Yahoo Finance, is a significant move intended to enhance oversight of the cryptocurrency market, especially in light of a rise in scams and fraudulent activities. By designating cryptocurrencies under the Financial Instruments and Exchange Act, the FSA aims to implement stricter registration requirements for exchanges and investment firms operating within Japan, which currently boasts over 7.34 million active crypto trading accounts. The proposed changes signal a proactive approach by the FSA, reflecting a recognition of the complexities and risks associated with digital assets. Experts have indicated that the introduction of insider trading rules akin to those governing traditional financial products is on the horizon, although specific details remain undisclosed. The FSA's focus on regulating foreign entities highlights the global nature of cryptocurrency trading and the challenges regulators face in overseeing a rapidly evolving market. As these developments unfold, the implications for both traditional and emerging financial landscapes are profound. The Trump family's foray into cryptocurrency could reshape perceptions of digital assets among mainstream investors, while Japan's regulatory reforms may set a precedent for other countries grappling with similar issues. The intertwining of political, economic, and technological forces in the cryptocurrency realm promises to keep stakeholders on their toes as they navigate an increasingly complex environment. Looking ahead, the future of cryptocurrency will likely be shaped by ongoing regulatory developments and the actions of influential players like the Trump family, as well as by the broader market dynamics that continue to influence investor behavior. As this landscape evolves, both opportunities and challenges will emerge, demanding careful attention from investors, regulators, and market participants alike. In a bold move to reshape the landscape of Bitcoin mining, Hut 8 Corp announced the launch of American Bitcoin Corporation, a majority-owned subsidiary with the backing of notable investors including Eric Trump. This strategic initiative aims to establish American Bitcoin as the world's largest and most efficient pure-play miner, leveraging Hut 8's existing infrastructure and operational expertise to build a robust strategic Bitcoin reserve. Hut 8, a recognized leader in the Bitcoin mining sector, has initiated this venture following a significant restructuring. The company has contributed the majority of its ASIC miners to American Data Centers Incorporated, which was subsequently renamed American Bitcoin. This transition marks a pivotal evolution in Hut 8's operational strategy. allowing the company to focus on its core competencies while enabling American Bitcoin to pursue aggressive growth in the cryptocurrency mining space. Eric Trump, who has taken on the role of Chief Strategy Officer at American Bitcoin, expressed enthusiasm for the partnership. By combining Hut 8's proven operational excellence in data centers with our shared passion for Bitcoin and decentralized finance, we are poised to strengthen our foundation and drive significant future growth, he stated. This sentiment was echoed by his brother Donald Trump Jr., who emphasized the importance of mining as a means to tap into the full potential of Bitcoin's economic opportunities. The launch of American Bitcoin is not merely a branding exercise, it represents a strategic endeavor to capitalize on the growing demand for Bitcoin amidst a rapidly evolving financial landscape. Asher Janut, CEO of Hut 8, noted that the establishment of American Bitcoin as a standalone entity positions both companies to align with their respective cost of capital, thus creating two focused yet complementary businesses. He remarked the transaction creates two focused yet complementary businesses, each purpose-built for its respective mandate. American Bitcoin's ambitious goal is to achieve over 50 exahashes per second EH/s at an average fleet efficiency of less than 15 joules per terahash J/TH. Such efficiency not only underscores the company's commitment to sustainable operations but also reflects a broader trend in the Bitcoin mining industry to reduce energy consumption and environmental impact. However, this announcement arrives at a time of heightened volatility in the cryptocurrency market. As of March 31, 2025, Bitcoin's price has been on a downward trajectory, closing at approximately $81,481. This decline, which marks the worst first quarter for Bitcoin since 2018, has raised concerns among investors about the future of digital assets. The recent drop is attributed to macroeconomic uncertainties, particularly surrounding U.S. trade tariffs set to take effect soon, fostering a risk-off sentiment in the broader financial markets. Paul Howard, Senior Director at Wincent, noted the correlation between Bitcoin's price movement and macroeconomic trends, reflecting a market increasingly sensitive to geopolitical developments. Correlation with macroeconomic trends has become a dominant theme for major cryptocurrencies like Bitcoin, he explained, highlighting the interconnectedness of traditional financial indicators and the performance of digital assets. As the cryptocurrency landscape continues to evolve, the establishment of American Bitcoin signals a strategic pivot for Hut 8. Aiming to solidify its position in a competitive market while addressing the growing demand for efficient Bitcoin mining operations. The venture not only highlights the company's commitment to innovation but also illustrates the potential for growth within the cryptocurrency sector even amid economic headwinds. Looking ahead, American Bitcoin's success will depend on its ability to navigate the complexities of the cryptocurrency market, including regulatory challenges, technological advancements, and changing investor sentiment. As the company gears up for its initial operations, it remains to be seen how effectively it can leverage Hut 8's resources to achieve its ambitious goals and contribute to the broader adoption of Bitcoin as a leading digital asset. In a bold move that underscores the Trump family's escalating involvement in the cryptocurrency sector. Eric Trump and Donald Trump Jr. have announced their investment in a new Bitcoin mining venture named American Bitcoin. This initiative is a collaboration with Hut 8, a prominent player in the Bitcoin mining industry, and marks a significant expansion of the family's business interests in the burgeoning world of digital currencies. The announcement made on March 31, 2025 reveals that Hut 8 will hold an 80% stake in American Bitcoin, while the remaining 20% will be owned by American Data Centers Incorporated, a company backed by the Trump sons. Eric Trump is set to take on the role of Chief Strategy Officer, further cementing the family's foothold in the crypto landscape. From the start, we've backed our conviction in Bitcoin personally and through our businesses, Donald Trump Jr. stated, emphasizing the potential they see in mining operations as a lucrative aspect of the cryptocurrency market. Bitcoin mining, which involves using large amounts of energy to power machines that process transactions on the Bitcoin network, has garnered both attention and scrutiny. The environmental impact of these operations has been a point of contention as the energy demands associated with mining have raised alarms among environmentalists and local communities alike. Publicly traded firms like Hut 8 operate extensive data centers that highlight the scale of modern Bitcoin mining, a far cry from the early days of the currency when individuals could mine Bitcoin using standard personal computers. The Trump family's foray into cryptocurrency is not entirely new. This announcement follows a series of crypto-related ventures launched over the past year, including World Liberty Financial, which offers various digital currencies, and a pair of memecoins initiated by Donald and Melania Trump. Such activities have led to concerns about conflicts of interest, especially given the Trump administration's prior relaxation of regulations surrounding the crypto industry. Critics argue that the family's involvement in crypto not only blurs the lines between personal and political interests but also raises ethical questions about the influence of private business on public policy. Interestingly, the shift in sentiment towards cryptocurrency within the Trump family has been notable. Just 4 years ago, former President Trump was vocal in his skepticism about Bitcoin, dismissing it as a scam. Now he champions the idea of making the United States the crypto capital of the planet. This transformation highlights the rapid evolution of the cryptocurrency landscape and the increasing acceptance of digital currencies in mainstream financial discussions. As American Bitcoin gears up to focus on mining operations, the venture's immediate goal is to accumulate a substantial stockpile of Bitcoin. Eric Trump is poised to elaborate on his vision for the new company in a live stream event, further engaging with the community and potentially attracting investors. The implications of this latest venture extend beyond the Trump family's business dealings. As Bitcoin continues to gain traction globally, the intersection of politics, business, and technology in the crypto realm will be closely scrutinized. The Trump family's aggressive push into Bitcoin mining could set a precedent for other political figures considering similar paths. With the crypto market's inherent volatility and the ongoing debates surrounding its regulation, the future of American Bitcoin and the Trump family's role in the industry remains to be seen. As the cryptocurrency landscape evolves, all eyes will be on this new venture to gauge its impact not only on the Trump family's fortunes but also on the broader crypto ecosystem. In a tumultuous start to 2025, Ethereum ETH has experienced one of its most significant downturns, plunging nearly 50% since a bullish endorsement from Eric Trump, son of former U.S. President Donald Trump. Initially, Eric Trump's tweet on February 21, which praised ETH as a great investment opportunity, seemed to bolster the cryptocurrency's market presence. However, just 2 months later, the price of Ether has dropped to around $1,820, a stark reduction from the highs celebrated shortly after his endorsement. Ethereum's market share has also taken a hit, declining from 10.28% to just 8.39%, marking its lowest level since 2020. The rapid depreciation in value can be attributed to multiple factors that have rattled the cryptocurrency markets, leaving traders and investors uneasy. Michael Van de Poppy, co-founder of MN Consultancy, highlighted a critical correlation between Ethereum's price movements and the performance of gold, which has surged in response to uncertainties stemming from President Trump's tariff policies. Van de Poppy noted, "I suspect that the peak of gold and the bottom of Ethereum are going to be correlated, indicating that as gold prices stabilize, ETH might find its footing." One of the major blows to Ethereum's stability came from a significant security breach at the cryptocurrency exchange Bybit, which resulted in the loss of approximately $1.5 billion worth of Ether. This incident not only shook investor confidence but also led to increased volatility within the market. Furthermore, the impending tariff war initiated by President Trump, which includes a controversial 25% tariff on auto imports set to take effect soon, has contributed to a general risk-off sentiment among investors. Despite these challenges, the World Liberty Finance WLFI, a crypto platform linked to the Trump family, has been actively accumulating Ether, tripling its holdings in recent months. Critics, however, remain skeptical of the motivations behind these transactions, particularly given the timing with Eric Trump's public endorsement. WLFI has clarified that its recent transfers were part of routine treasury management rather than an indication of an impending sell-off. As Ethereum grapples with these headwinds, analysts are speculating about its potential recovery. Currently, technical indicators suggest that ETH could face further declines, possibly dropping to around $1,490. Nevertheless, there remains a glimmer of hope for bullish sentiment. A rebound from current support levels could trigger a double bottom pattern, potentially setting the stage for a recovery towards $2,500. In light of these developments, the upcoming Pectra upgrade scheduled for April is anticipated as a potential catalyst for Ethereum's resurgence. If successful, it may help alleviate some of the scalability and gas fee issues that have plagued the network and contribute to a more favorable market outlook. As the second quarter of 2025 approaches, Ethereum's trajectory remains uncertain. The interplay of external economic factors, technical market indicators, and internal developments within the Ethereum ecosystem will ultimately dictate its path forward. Investors and analysts alike are keeping a close watch on these dynamics, hopeful for a rebound in a market that has seen its fair share of turbulence. In the ever-evolving landscape of cryptocurrency, the battle for dominance among various digital assets continues to intensify, particularly as major players make bold predictions and issue stark warnings about the future of financial systems. Recently, Solana SOL has found itself under significant pressure in the market. After hitting a critical resistance level at $145, it faced rejection, leading analysts to speculate about its short-term viability. Meanwhile, BlackRock's CEO Larry Fink issued a provocative warning regarding the potential implications of Bitcoin on the US dollar, asserting that the world's leading cryptocurrency could be undermining the dollar's status as the global reserve currency. Solana has been a focal point for investors seeking high returns in the crypto space, particularly given its recent technological advancements and growing ecosystem. However, the rejection at the $145 mark has raised eyebrows. Analysts are closely monitoring the asset's performance, with some suggesting that it may struggle to regain upward momentum unless it surpasses this pivotal resistance level. The market sentiment around Solana remains mixed, but there's no denying that it's at a critical juncture, commented a market analyst who wished to remain anonymous. In stark contrast, Bitcoin's trajectory has been a roller coaster ride, with its price peaking at $110,000 earlier this year, driven by a complex interplay of political and economic factors. As Fink noted in his annual letter, the U.S. faces a daunting $34 trillion debt, with interest payments alone projected to exceed $952 billion this year. This staggering figure highlights the urgent need for fiscal responsibility, as Fink warned that continued deficits could push investors toward digital assets like Bitcoin, which may be perceived as a safer store of value. The U.S. has benefited from the dollar serving as the world's reserve currency for decades. But that's not guaranteed to last forever, Fink cautioned. Indeed, the implications of these shifts are profound. If investors begin to favor Bitcoin over traditional fiat currencies, it could signal a seismic change in how global financial systems operate. Fink's remarks resonate with a growing chorus of voices, including tech magnate Elon Musk, who has expressed concerns over the ramifications of U.S. debt levels, describing them as terrifying. The sentiment in the market reflects a mixture of hope and trepidation as traders navigate the complexities of a potential economic slowdown marked by stagflation, a scenario where inflation rises amidst stagnating growth. Amidst this backdrop, Solana is also witnessing a surge of interest in its ecosystem, particularly with the recent launch of PumpSwap, which has already seen trading volumes surpass $10 billion. This influx of activity could bolster Solana's position in the market if it can capitalize on this momentum and provide robust use cases that attract a wider audience. Analysts are optimistic, with some predicting that Solana could reach $220 before mid-April, driven by the broader enthusiasm for meme coins and innovative projects within its network. As the cryptocurrency market continues to evolve, the next few months will be critical for both Solana and Bitcoin. For Solana, overcoming the $145 resistance could pave the way for a significant rally, while Bitcoin's positioning as a digital alternative to traditional currencies amid mounting economic pressures will be closely watched. Investors and market participants alike are left to ponder what these developments mean for the future of digital assets and the financial systems that govern them. As the landscape shifts, one thing remains clear: the dialogue surrounding cryptocurrencies is far from over, and the potential for both innovation and disruption is immense.